Welcome to Military Mortgage Advisors. Today we have an amazing class for you. Everything veterans need to know about their VA loans. We're your host. I'm Josh. That's Zach.
Hello.
Let's get into it. All right. So at Military Mortgage Advisors, our mission is to educate the community to serve and protect our military homeowners and promote homeownership. So Zach and I are veterans ourselves, and so it means the world to us to be able to give back to our community. And that's why we created Military Mortgage Advisors. So who are we? Zach and I both are veterans. We actually have an interesting story. Zach was my first team leader. So we're both infantrymen. We served here at Fort Carson together. And I'm sure, as you can imagine, a brand new infantry private showing up to his new unit, we have some interesting stories and we have been through our ups and downs for the years. But we have different stories about how we got into real estate. I actually started fix and flipping homes using hard money, things of that sort, and had no idea about my VA loan and the power that it could bring to my portfolio. Um, and Zach started in a little bit of a different way, and I'll let him get into that.
Yeah. So I actually stumbled into mortgages through one of our mutual friends, and he pretty much called me to refinance my house while I was still in the military. And I started really digging into asking kind of what he was doing, what kind of like what got him into the career field. And I started actually originating loans my last year in the Army. So it really gave me an experience before, I was almost at the halfway point. It allowed me to see experience on the civilian side and really see that I can have a huge impact on the veteran community educated about this benefit that we really, I used my VA loan twice while I was in. I never got a formal class or formal education on how to use my VA loan. I really just winged it both times. And so I saw the opportunity to educate veterans on this benefit that we earn through service.
Yeah, exactly, guys. Like I just said, I had no idea about it. I was living in a one bedroom apartment, fixing flipping homes, using hard money, not knowing that I could have owned my own home and been building wealth, while living in a property using my VA benefits. So, we are very passionate about spreading that knowledge now because, like Zach said, you don't get told about this from your leadership, or, the Army doesn't provide, or any of the branches don't provide you with the appropriate education for your VA loan benefits. So, like we just said, we're not trained on the VA loan benefits, which just is mind blowing. 68% of veterans who had a home reported they used their VA loan. 33% of veterans that had a mortgage indicated that they did not know about the VA loan program. Again, guys, they're not telling us, so that's what we're on a mission to do, is to educate veterans and make sure that everyone is at least aware of the program. 46% of veterans reported their lender had not brought up the VA loan as an option. Look, guys, the average lender only does two VA loans a year. They are not educated about the program themselves. You need to find lenders that know the program ins and outs, and that's what they specialize in, because they can walk you through the process. The everyday lender can't do that, and they're going to try to steer you away to an FHA or a conventional loan. So here's some other key findings from that report. Half of active duty military believe they can only use their VA loan once. Guys, this is not true. You can use your VA loan multiple times. You have bonus entitlement. You can actually own multiple homes simultaneously within your VA loan. Zach here is a prime example. He owns two homes currently in his VA loan, one in Georgia, one in Colorado. Half of the active duty military believe VA loans have higher interest rates. Again, guys, this is another myth. This is not true. VA loans have substantially lower rates than conventional or FHA loans. Only a third of veterans know that no down payments are required for VA loans. Zero down, guys. Zero down. Now, that does not mean that you can get into a home for no money. You are still responsible for your closing cost as the veteran. Now, if you work with a team, all of our agents at Military Mortgage Advisors know about seller concessions and are very, very good at negotiating seller concessions for veterans. Now, what are seller concessions? Seller concessions are basically a credit from the seller that will allow you to cover things like your closing cost. 59% of veterans believe that VA loans have longer processing times, and 49% believe that they are inferior to conventional loans. No, again, guys, this is not true. You can close them just as fast, if not faster, than conventional and FHA loans. Despite the misconceptions, on a scale of 1 to 7, 80% of the veterans who have used a VA loan rated their satisfaction at a 6 or a 7. That is phenomenal, guys. They're rating it at the top of the scale. It is a phenomenal program. It is the best loan program, in my opinion, that is available. All right, guys. So who can use a VA loan? The VA loan is an owner occupied loan that is intended to be occupied as a primary residence. So, what does that mean? If I'm a veteran and I'm using my VA loan to purchase a property, I have to intend to use that property as my primary residence. So, who can use it? Any veteran across any branches: Army, Marines, Air Force, Navy, Coast Guard, and yes, even the Space Force qualify to use their VA loan. Now, a veteran and a spouse can use it together. And then a veteran. What do I mean by that? So, Zach and I, we're not married and we wanted to purchase a property together. We can do so. And then that property would split equally amongst our entitlement. And then, guys, you can also use it from a veteran and a non veteran. So, you want to purchase a house with your brother or your cousin, you can do that. Now, half of the amount will go onto your entitlement, and then your non-veteran partner that is going to purchase the property with you will be responsible for a down payment on the other half that is not being guaranteed from entitlement. Now let's get into the VA funding fee. Vets with more than 10% disability from the VA are exempt from the funding fee for life. Okay, guys, let me say that again. You are exempt from the funding fee for life. Now, the funding fee can differ depending on if it's your first time use or any subsequent use. So for your first time use with no down payment, you're going to pay 2.15% of the loan amount as a funding fee. And that's just the fee that the VA takes in order to guarantee the loan. Now, if you come with a 5% down payment, it would go to 1.5%, or 10% down payment or more, it'll go to 1.25%. Now, on your any additional uses, any subsequent uses, you will pay a 3.3% funding fee. With a 5% down payment or more, you'll pay 1.5%. If you come with 10% or more, you'll pay 1.25%. Now, we see all the time that people are recommending that you come with this down payment just to save a little bit of money on your funding fee. Now, there's two things to keep in mind with this. One, your funding fee can be rolled into the loan amount. So if you don't have that extra cash to close, it may be better just to roll that amount into your loan and not worry about coming with extra cash to close. But let's say that you do have extra money and you want to come to the table with a little bit more. It may not make sense to come with a down payment of 5% just to save 1.5%. You could just go ahead and pay your 3.3 or your 2.15% funding fee and not have that additional amount rolled in. Now let's get into credit scores. So we hear it all the time. I was denied for a VA loan because they said my credit score was not high enough. Well, the VA does not have a minimum credit score requirement. Okay. So here's a snippet straight from the VA handbook. The VA does not have a minimum credit score requirement. The VA looks at the veteran credit history. Okay. So if you have something that's popping up on your credit, they're going to look at it and see, okay, is this an isolated event or is it a pattern? Have you not been paying your bills for an entire year, or did something just happen? Can we say that there were circumstances that caused this incident? If a veteran does not have any late payments within 12 months, they have reestablished credit. Okay. So, guys, if you have been denied due to your credit score, reach out to other lenders, reach out to Zach and myself. We may be able to help you because, as it states here, the VA doesn't have any requirements, but the way it works is lenders, it's essentially commander's discretion, right? Lenders can add overlays. They can add to, but not take away from the VA guidelines. So what does that mean? That means that if you go with XYZ mortgage company, they may, in their guidelines, say that you need a 650 credit score in order to qualify you for that loan. But Zach and I, we go directly off the VA handbook. So what does that mean? That means we have no minimum credit score. Does zero down equal a weak buyer? No, not in my opinion. In my opinion, veterans are actually the best buyer. Now let's look and see what the stats say. Veteran home buyer facts. The average FICO is a 736. That is better than your traditional conventional buyers. The average liquid assets of a veteran is $17,032. The average home income is $90,156 a year. 28% of veterans hold at least a bachelor's degree. 1.4 million VA loans were originated in 2024. And 83% of vets use their VA benefits after active duty. I don't know, guys, but in my opinion, this is better than the average buyer in the United States. So now let's get into what's the cost of renting. Why should you purchase a home and start putting your BAH to work? So let's look at it. Rent versus principal paid in 36 months. If you're renting a property, you're going to pay $88,674.75 in 36 months. Now, this is in our area. What you would pay in principal versus that would be $19,435.88. Now, what does that do for you? Let's look at your net worth. So if you were to pay all your payments on time, your net worth in 7 years renting versus owning. If you're renting, you have built no net worth. You are paying someone else's money. A mortgage. Let's think about monopoly, guys. The goal is to own as many properties as you can and to have other people pay your mortgage for you, right? If you're renting a house, you're doing exactly that for them. Now, if you purchase a house, what is your net worth in 7 years? It'd be $160,181.55. That is amazing, guys. Look at the difference there. Now, how do we get that? That's with standard appreciation of a property and with you paying down that principal amount. So how does the VA loan compare to other loans? In my personal opinion, like I've said many times, it is my favorite loan program. I think it is the best loan program available to anyone. Now let's get into why. So portfolio default rates. So the amount of people that are foreclosing on their loan. The VA has the lowest amount, as you can see here, at 1.98%. That is phenomenal, guys. FHA is the lowest amount, or the highest amount at 9.1%. That is a ton, guys. So many people are defaulting on FHA loans. And conventional, they're okay right in the middle, at 2.47%. Now, let's say that a default does happen. Why do lenders love the VA loan program so much? If you use a conventional loan, they are getting no money back. That loan is not guaranteed in any type of way. So they are losing all of that money. Now, if you have an FHA loan, there is a funding fee for the FHA loan as well. So they have a possible payout, or they may receive some of that money back. Now, for a VA loan, that money is guaranteed. So the lender is going to get 25% of the money back. That is why they love VA loans because one, it has the lowest default rate, but two, if you do default, they're still going to get a portion of their money back. Now, Zach, I'll pass it off to you and I'll let you go into comparing FHA and VA.
Yeah, absolutely. So we have a saying in our industry, don't FHA my VA. What that really means is that a lot of people get confused and think that FHA and VA follow the same underwriting guidelines and have the same rules and regulations, and that is just absolutely not true. So, first and foremost is the 90-day flip rule. So, FHA does have a 90-day flip rule and the VA does not. What does that mean exactly? So, the FHA, if a investor, a flipper buys a house and wants to flip it and sell it within 90 days, an FHA buyer cannot buy it until after 90 days has elapsed. So, what does this mean? It makes it a little bit more difficult for FHA buyers to buy a home from somebody who's just fixing and flipping properties. VA does not have a 90-day flip rule requirement, so this opens up the opportunity for sellers to offer and accept VA loans. So the wait 1 year to buy again. FHA has a very, very strict occupancy requirement rule where somebody has to occupy that property for minimum 1 year before purchasing another home. VA does not have this minimum occupancy requirement. The reason being is, let's say that you come down on orders, you just bought a house, and now all of a sudden you are being reassigned somewhere else. The VA sees that, understands that, hey, they bought a house here and now they're moving and are trying to buy another house. This is what we call an extenuating circumstance, and the VA does not have this minimum 12-month requirement. Same thing if maybe you bought a house that's too big, too small, you can always upsize or downsize your home with a VA loan as well. Now, minimum distance rule. FHA will not allow you to have two homes within 100 miles of each other. FHA is not designed to make you an investor or start building your portfolio. This is where VA really differs because you can have two homes within the same city of each other, right? This goes back to maybe you're trying to upsize for your family, you have a new family member coming on board, and now you need a bigger home because the home you bought is no longer suitable for your family. You can have a home within the same city, town with a VA loan, but you cannot with an FHA loan. Appraisal with the property. This is a big misconception that people often do not know. On an FHA loan, when appraisal is conducted, it will stick with that property for 6 months. So that value of the home will be there for 6 months. You can also transfer that appraisal to another buyer for 6 months. There's a lot of different things that can happen with FHA. For VA, that appraisal is good for either until the veteran completes the transaction for the home or terminates the transaction for the home. It does not stick to the property. Now, you're probably wondering, why is this important? Let's say someone's trying to get a specific dollar amount for a house and it comes in lower value on FHA, that value will have to be used for the next 6 months. VA, if somebody terminates their contract and another appraisal can be conducted on that same home. It's not the case with FHA. Last and not least, gift fund rules. Many people get this confused and do not know this. For FHA, gift funds have to specifically come from a family member. But on VA, they can come from realistically anybody, a friend, family member, organization, wherever the case may, battle buddy, whatever the case may be. Those gift funds can come from anybody on a VA, but on an FHA, they have very strict rules and it can only be from a family member. Moving right along. Know that VA loans are actually easy to get through underwriting. Underwriters are encouraged to consider every possible appropriate factor in seeking probable basis for approving loan applications for qualified veterans. As long as lenders document their reasoning, it is extremely unlikely the VA staff would ever take issues with their decision. The problem with VA loans is primarily with uneducated real estate professionals. So, as we've harped on a lot of myths, misconceptions, and dispelled some of those, this is the biggest problem that Josh and I see when it comes to VA loans is real estate professionals are not educated on them or they have bad information about them. So as we see here, underwriters are encouraged to approve as many veterans as possible as long as it makes sense, right? This does not mean if you just blatantly have not paid any of your bills that you should be approved for a loan. This just means that some days some people have some extenuating circumstances that can be explained. VA loans don't take longer to close. 99% of all veterans have automatic underwriting authority. This means that a lender can approve and fund a VA loan in-house without any further approval from the VA itself. The national average from time to close on all products originated year to date is 48 days. So I want you guys to think about this. Average lenders take 48 days to start from start to finish on a mortgage loan. Our average start to finish on VA loans, because this is all we do, is 13 days because we are not average. So if you are trying to get into a home quickly and efficiently, this is what we specialize in. A lot of these other big box lenders, these 1-800 numbers, they will need 45 or on average 48 days to close. This is not some quack off numbers. These are real actual facts from the mortgage industry. So if you're trying to get into a home quickly with least amount of headaches, this is what our team is here for. Entitlement misconceptions. So, a big one that we hear is that you can only have one VA loan at a time. As Josh mentioned, I personally have two VA loans out right now, and I have enough remaining bonus entitlement to purchase a third home up to $392,000. Bonus entitlement, if you're curious about that, reach out to us because that's a case by case basis on how much you would have left for your next purchase. Now, going back to some misconceptions here, if you had a foreclosure on your VA loan in the past, you can never use your VA loan again. This is absolutely not true. Now, what does happen, this impacts your bonus entitlement. So if you have gone through a foreclosure or short sale, please reach out to us because every case is going to be different on how much bonus entitlement you have. But to hear that the VA loan is gone forever, if you've been in this kind of financial situation that came to the worst case possible of losing your home, it does not mean the VA loan is gone forever. Now, another thing that we hear about is confusion on the max loan amount. So we are here to dispel this myth, excuse me. The VA does not have a max loan amount. As long as you can qualify for it and afford it, you can purchase up to a 2 million, 3 million, or the most I've seen is a $4 million home with your VA loan with no money down. You cannot do this with any other loan program. So when people say the VA loan has a max loan amount, that is absolutely not true. And if you are looking at using your VA loan for a higher loan amount, and if you're being steered towards a conventional loan, please reach out to us because the VA jumbo loan is far superior than a conventional jumbo loan. It will save you having to put 20% down. It will save you on the strict underwriting guidelines that conventional has with jumbo. It will save you a headache. Yes, you can use your VA loan for a jumbo loan or a high purchase balance. Moving right along. Kind of harping again, the VA has no max loan amount. A veteran with full entitlement. Okay, so you do not own any homes with VA loan. You've never had a foreclosure on your VA loan before in the past. This means you have full entitlement. So going back to if you can qualify for it, you can afford it, you can get a loan for it on your VA loan. So if you have lost a portion of your entitlement or you have a portion of your entitlement tied up, what happens now? Okay. Now let's say you've used a portion of your entitlement and now you want to buy a house for, let's say, 500,000. You have 400,000 left on your entitlement. You will be required to bring a difference on the difference, right? That difference would be $100,000, 25% down on that difference. So not 25% of the full balance that you're buying a home for, but on the difference from where your VA loan is maxed out from that bonus entitlement and going over. So in this case, you'd have to bring $25,000 down because you have 400,000 left on your entitlement and you're buying a $500,000 house just for quick math. So you can still use your VA loan if you bust entitlement, as we say. This is just the parameters for it of bringing that difference on that down payment. Know that VA loans can be used to purchase almost any type of property. You do luxury homes, high-rise condos, quadplex homes, and large acreage homes. The reason being the VA for this one, a lot of people get confused on. The VA has no max or no acreage limit. So you could purchase a property that has 50 acres. Josh personally has 110 acres, and you could purchase 300 acres, so on and so on. There is no acreage limit when it comes to using your VA loan. Where can you use your VA loan? Now, if you served in the military, you've served with people that were from Guam, Puerto Rico, Hawaii, Samoa, places like these. So you can actually use your VA loan to purchase in America and its territories or possessions, which include all those locations that I just named: Puerto Rico, Guam, Virgin Islands, America, Samoa, Northern Mariana Islands, things like that. So you can use your VA loan to purchase in these territories. You will just have to find a specific lender that will issue funds in those territories if this is where your home is. A big thing that we hear is VA appraisals are difficult, they're tough. It's what makes people hate VA loans. It's a super scary word when it comes to VA loans is the appraisal process. But what if I told you that the VA appraisal process is really not tough if you know what to expect? So what can you expect? Now, when an appraiser is going out there, they're looking for minimum property requirements. Okay. So this is making sure that the house is deemed to the standard before the VA will issue funds on it and guarantee that loan. Really, what this is doing is protecting the interest of you as the veteran and also as the investor who's issuing the loan. What the appraiser is looking for is making sure that the house is safe, sound, and sanitary, right? What do we mean by that? It's not broken windows, there's not huge holes through the wall, roof, things like that, not covered in animal odors or feces or excrement or anything like that. It is making sure that how that house is safe for you and your family to move into right as you get the keys, right? You're not buying a fix and flip. You're not buying a trap house. You're buying a home that you could immediately move into with you and your family. This is what the VA is trying to do. So when we hear that the VA appraisal is all scary, it is actually not scary. It is meant to protect you as the veteran. What are some examples of MPRs? Chipped paint. Chipped paint is a big thing that gets called out on VA loans. The reason being is exposed wood leads to rotted wood. Paint is a protectant. So a lot of people get upset that this is something the VA calls out. It is, again, protecting you from structural damage to the home through exposed wood, water damage, and things like that. Guardrails missing. If you have a few steps, maybe going up some stairs to the second level or down to the basement, if there is not a handrail for safety, the VA will call this out. Now, it is again a safety measure for you and your family, and this is a very easy fix. Rotted wood, like I said, from primarily that chipped paint, interior, exterior can be called out. But again, these are not deal killers, right? These are very simple, easy fixes that can be done whether up front or during the process of you buying your home. These are very easy things to get through underwriting. All we typically need to clear these conditions is a photo showing the work has been complete, submitted to the appraiser for their approval. So these are very easy tasks that can be done quickly. Also, the VA appraisal offers you the best opportunity for an at value appraisal. What do we mean by that, right? If you're buying a home for 500,000, you want the house to appraise at 500,000 or more to determine that you are paying a fair market value for the home. Now, 91% of VA appraisals come in at or above the contract price. So as long as that house has been priced accordingly, typically what we see is veterans walking into the amount that they agreed to for the purchase price, or even sometimes a little bit of equity. I've seen as much as just, $2,000 all the way up to $15,000 a veteran has walked into on equity. So this is why VA appraisals are better than conventional because you have a higher chance of getting that contract price or walking into a little bit of equity off the bat. Now, this chart, I do apologize, it is a little blurry, but this shows you essentially how the VA loan compares when we're looking at seller concessions to other loan programs. Now, if we are looking at the property type, we know that we are looking for our primary properties, right? We're using our VA loan for our primary residence. Same with FHA, conventional can do primary or secondary, or even investments, and USDA is primary. But when we're looking at this compared to the other programs, we know the VA loan is 0% down. The contribution type. Now, this is that concession. This is that credit from the seller that they can give you. They can cover your closing costs, your prepaids, your discount points to buy down your rate, and can even include paying off debt. Absolutely fantastic tool compared to all the other loan programs. So you may be wondering on that last part, I can have a seller pay off some of my debt when I buy a home. And yes, I have seen sellers pay off $15,000 worth of debt for a veteran home buyer through seller concessions that freed up a $1,000 monthly payment this gentleman had. So you can really leverage seller concessions, not just for closing costs or discount points, but to pay off debt that may put you in a better financial position when buying a home actually than you think. Now, max seller contribution. Now, this is where the 4% rule comes into play. And keep this in mind, this is going to be a little bit loaded of a gun right here. So, some people believe that the max contribution a seller can give is 4% to a veteran. Now, that is true to an extent. What does the 4% rule fall under? If someone is paying off your debt or giving you some kind of appliances or things like that, this is where the 4% rule comes into play. So that means they cannot exceed 4% of your loan amount that they're giving you for concessions. But a separate bucket is your closing costs. Closing costs and concessions are a little bit different thing, right? So when we're looking at our closing costs, that's paying for your title fees, any lender fees, discount points. There is no limit on this. Okay. But when we're looking at some kind of concession to pay off debt or a 2-1 buy down, this is where the 4% rule will come into play. So if you are looking at getting your closing costs covered, your taxes, your insurance, lender fees, title fees, there is no limit to what that can be. If you're requesting a seller to pay off your debt or maybe buy a new stove, fridge, appliances, this is where the 4% rule will come into play off of your loan amount. Now, FHA loan, you're going to be capped at 6% seller concessions across the board. No ifs, ands, or buts, unlike VA. Conventional, it really depends on how much you are putting down. It could be 3, 6, or 9%. And on conventional investment, max is 2% seller contribution. USDA loan follows FHA at a max of 6%. So again, this is where showing how if a seller is paying all of your closing costs, let's say you want to buy down your rate a few discount points, the sellers can do that and not be maxed out like these other programs are. So this is showing how the VA loan is far superior in terms of getting seller concessions and closing costs. VA assumptions. I want you to know that VA assumptions sound a lot better than they actually are. These sound like they are just the greatest thing ever, and I'm going to break it down to you. They really are not. They are good in some situations, but let's dive into what that may be. All right. So this is what you really need to know about VA assumable loans, okay, or loan assumptions, whatever you want to call it. These take time. What do I mean by time? It could be as fast as 60 days, as slow as 6 months. So I want you to think about that. If you're on a timeline to PCS or find a new residence and you have 30 to 60 days, and that assumption takes 6 months, where are you going to live for those other few months, right? This could put you in a very tough predicament. There is no estimated established contract closing date. It really takes time. Each lender is going to be different. Now, that's going to be different on their timeline to get it done, right? 60 days to 6 months. Every lender is going to fall under that different timeline. The underwriting requirements for the lender may be different. Josh and I mentioned overlays. If you are trying to assume a loan, that lender is going to underwrite you to their guidelines, and they may have overlays, additional rules, making that approval process for you more complicated than with a lender like us who has no overlays. You don't have a loan officer, right? You don't have a go-to person. You don't have someone who's going to answer your questions. You are dealing with the servicing department of that mortgage company because they are servicing that loan. All they're trying to do is transfer it to your name, and it is not as easy as it sounds, just transferring it from you, from the seller to you. The other thing to keep in mind is you likely need some cash. And what that cash may be is going to be different from different between each assumable home loan, right? My example is if you tried to assume my loan, you're going to have to pay me cash $225,000 to fill the gap. I don't know about you. I don't have $225,000 to throw towards a house just to get me a lower interest rate. If you do and you want to assume a loan, more power to you. But most people do not have that much cash on hand to put towards a home. Now, if you're like, well, hey, I can get a HELOC. I heard that I can get a HELOC. Yes, you can, but this goes back to every lender is different. Is that lender going to allow you to take a HELOC? Can you qualify carrying the first mortgage, right? The home's mortgage and the second mortgage of the HELOC. These are two separate payments. And typically, HELOCs have what we call an ARM on them. They are ARM products, adjustable rate mortgages, meaning that second mortgage can increase by a few percent every month or decrease, right? It is a flexible monthly payment. I don't want to say flexible, but it can go up to where it really burdens you and your family's budget, or it could drop down, save you a little bit of money, but it's kind of like Russian roulette every month. It could go up, it could go down, and these two payments you have to qualify with. And some lenders will not issue HELOCs. They will not allow HELOCs. They don't do HELOCs for this kind of scenario. So it's really finding a needle in a haystack if you are looking at a HELOC product. Are they out there? Yes. Are they extremely difficult to find? Speaking as a lender, yes. Do we offer them? Yes, but here's the catch, making it really difficult to offer. The minimum loan amount for these through our investor is $150,000. That means you have to fill a gap on a home you're looking at for $150,000 or more and able to be able to do this. So the assumables, are they good? Maybe. Does it make sense? Maybe. Are they a pain in the butt? Absolutely. Are they going to take time? 100%. Are you going to have a good point of contact to go through? Absolutely not. And every lender is going to give you a different experience. Josh and I have heard of good experiences and terrible experiences. There's really nothing in the middle other than keep in mind you're going to have to bring money. You're not going to have the best experience, and it may not fit your timeline. But if you have questions about this, please let us know, and we'll be happy to walk you through if you are interested in learning more about assumable loans. So what's next? All right. Maybe you're like, all right, we got all the information. We're ready to move forward and see what we do. All right. Your first initial step would be submit a loan application and your supporting documents. You're thinking, oh my God, a loan application. I don't want my credit checked. I don't want to do this or that. Well, I'm here to tell you something. Josh and I do a fantastic pre-approval that does not involve a hard check on your credit. What it does involve is a soft check on your credit. So there is absolutely zero risk to you. Okay. With that, we'll collect your supporting documents. What are supporting documents? Very easy and straightforward. Your pay stubs for the past 30 days, your bank statements for the past 60 days, any 401k retirement account you'd like to add. Depending if you're self-employed or not, we would need your tax returns, W-2s, and things like that. Very easy documents needed for a pre-approval. Okay. Assets and income is what I say is always most important when you're trying to get pre-approved because that allows us to look at your financial picture. Pre-approvals do take 24 to 48 hours. The reason being, Josh and I do not do one-click pre-approvals. If you get a one-click pre-approval, it's as good as the toilet paper in your house. Okay, let's keep this in mind, right? We want to verify your income and assets because just because someone, Josh and I have seen it, we've had people tell us they make $10,000 a month and we get their pay stubs and it looks like $1,500 a month. So somebody forgot a zero somewhere. And we want to make sure that we give you an ironclad pre-approval. Ironclad meaning that we have all our ducks in a row. We've verified all your income and assets. That way, when you go to put your offer in on a home, there's not a risk of losing your earnest money and funds like that. After you're pre-approved, what we like to do is the 30-minute consultation. We show you different programs, different purchase prices, different interest rates that may be available to you, what that really looks like so you know exactly what you're stepping into in terms of a monthly payment for homes that you're looking at. After we have you pre-approved and discussed your loan consultation and everything like that, we're going to pass you back off to your realtor. You and your realtor are going to go looking for homes. Your realtor is going to help find you that home, open the keys to look at that home, or open the door, excuse me, and negotiate the terms of that home for you. And this is where your realtor and I and Josh work hand in hand to make sure that we fit into the best deal possible for you, but it will be ultimately up to your realtor to negotiate the terms of that sale for you. Now, we always get asked, what is the time from, going under contract to closing? Typical sales contracts are written for 30 days. If it needs to be faster, we can do that. This goes allowing us to speed that up is by having that ironclad pre-approval. We already have your bank statements. We already have your pay stubs. We have closed loans in as little as 8 days in emergency situations. But that is things moving very, very, very fast, and everyone needs to be on the same page with that. But most sales contracts will be 30 days. Can they be past 30 days to meet your situation? Yes, some sales contracts can be 45 to 60, but I will not, dive into that too much further because that's going to be your realtor negotiating that contract for you. Every market's going to be a little bit different. Some may have the flexibility for a longer contract if you need that. Some may not. It just really depends on the market for that area. So these are the steps moving forward. If you want to submit a loan application, just see what you're pre-approved for. Again, reiterating, soft check on credit, verifying your documents. It is really no cost to you whatsoever, not a burden to you whatsoever. It doesn't impact your credit whatsoever, and gives you that warm and fuzzy of what you're pre-approved for, especially if you're one of those people that have been denied in the past. The soft check on credit is the way to go for you moving forward, just to see, can we do something for you or not? Was it something that other lender had an overlay on that they just couldn't get past? And again, we don't have overlays. All right, but okay. Maybe you're not ready to move forward. Okay, you're not ready to pull the trigger. All right, here's what I need you to do. Take a knee, drink water, and do the following. Okay. Josh and I run Military Mortgage Advisors Facebook group. This is a great place to go, whether you want to ask a question, engage, or just learn more about your VA loan. We post in there daily different tips, tricks, and topics going on when it comes to your VA loan or just military life. We'll drop a meme in there here and there. All right. Also, if you're looking for more video content like this, subscribe to our Military Mortgage Advisors YouTube channel. This is a great place where we'll be posting videos and we'll also be sharing this as well, the recorded copy. So if you guys have any questions, let us know. I also forgot to add in here, don't forget to join our website, which will have realtors listed, other educational pieces of content, and realtors if you are looking for one of those in your area. But yeah, thank you guys so much for joining us. I'm Zach. This is Josh. And this is Military Mortgage Advisors, everything veterans need to know about their VA loans. Thank you so much.